To
No, I'm
ask
just saying, what are you coming to
you, have you
future?
joined futures yet?
I was gonna call BW. I'm gonna hit BW up this afternoon. I just been having some issues right now.
No worries, no rush, no rush. That's why we're here to help each other.
Yeah, I'm gonna DM you in a few minutes with my number, man. When you get off.
Yeah, hit me with your number because sometimes you randomly call me and I call you back and then I don't think you get it. So we'll
Yeah,
link.
I didn't even see that till the next day.
Oh, okay. Yeah, I saw that you're still active, but uh that's fine. I'll get you set up. There's no rush. The market's not going anywhere.
Yeah, and there's also a 90% off sale with Apex. So
Uh
I don't want you to spend
no, he's not
a
gonna
lot
do
of money.
Apex. No, Luther has money, so he's not gonna do the one with all those rules. I think there's a lot of other ones that give you a little bit more cushion because if you sign up for Apex or whatever, there's a chance that he might break one rule and then lose the account and he'll be pissed. So um
Oh yeah. Okay, no,
yeah,
that makes
he
sense.
he has a little bit more money to play with, so like why not get the better prop firms? But
Very
yeah,
good.
Milena, so since you're here, the thing I want to talk to you about is you're always saying, oh, there's one or two confluences I need to make it a good trade, but every time it's all emotion. But I think what you're missing is the actual to ask yourself what is actually the confirmations that you need in order to make that trade. That's why I was asking you kind of like a therapist, to try to get a more direct answer instead of like, oh, this could be good. If I do this, that'll be great. It's easy to do this, but I think it'll take away your emotions if you find out what the issue is. Because if you're attempting to correct something and you're not really getting like the results, I think you have to find out what it is that the way you're correcting, the issue to make it easier for yourself.
No facts.
Yeah, so I'll just go over a couple trades since I know you have limited time. But this is some of the things that I was trading that actually played out pretty well this week. Okay. This is NQ, very similar to QQQ. So Luther, in case you're trying to understand the difference between futures, NQ, and the Qs, they're exactly the same, pretty much. So let's go. This is the 5 minutes. 5 minutes. So if you remove all this junk, right? You see this? It's basically the same chart. It's basically the same chart, right? You see this little accumulation right here. You got the accumulation right here. The head and shoulders right here. There's a head and shoulders right here. So when you transition over, it's not like you have to learn new candles or anything. The only good thing about it though is that you're more liquid in all other hours. This is a pre-market right here. And this is the pre-market over here. You can see there's the candle volume is a lot easier to trade. You see like there's the trend line break right here, you
Mm-hmm.
know. This one's not as clear, but yeah. So one of the trades that I took that was pretty nice is that first things first, let's get that out of the way, right? What I look for is unmitigated, um, unmitigated fair value gaps. There's no fair value gap here. I think it's a 5 minutes. Okay. So we had this fair value gap right here, unmitigated right here and right here. So usually fair value gaps for me, they act as areas of liquidity. So once we touch that, it's basically like wicks, right? So if you see liquidity right here, we take this one out and now we can come down. We sweep liquidity. This is called the stop raid. So when we stop raid, now we look for liquidity to the downside. So where's liquidity? Right here, right? And then there's a bunch of fair value gaps here that hold up this price. Just like I said, they're very similar to whatchamacallit, wicks, right? Their liquidity is basically where, or fair value gaps is where price is a magnet to, just like liquidity is where price ends up taking out. So this is okay, let's see. Okay, so this is Thursday. Let's see what trade that I ended up taking.
So-
Okay.
So question, do you always trade on a 5 minute or do you like zoom out then zoom
I trade on
in?
the 1 minute, but I use what helped me is that I'll have a chart side by side right here, and I'll have this one on the 1 minute and then this one on the 5 minutes. So right
Got
here.
it. Okay, cool.
Yeah. So I can kind of like not freak out if price is kind of coming down. And then hold on, let me try to see where we're at right here. This is Friday at Thursday at 8:30. Let's see, Thursday at 8:30. Okay. And a lot of things that you learn also with futures is that when people talk about liquidities and stuff, we start noticing a lot of cup and handles and head and shoulders everywhere. And that's that's how you want to enter trades. So a lot of times when you're trying to enter trades, we need a break of structure first, which is where we break out and then we enter on the retest, right? And how do we enter on the retest is off of these fibs. So once we break out, right, we look for like the discounted range, like right here. This is probably the 618. You see 618 fair value gap. Then where is the liquidity after we break and retest, right? Liquidity is this high, right? You see how we take out this high right here. So this is how I was able to catch bigger moves with futures, is because you don't want to enter on any breakouts. You want to get it on the retest, and then that will take you to all the unmitigated liquidity. So this liquidity almost took this out. So I know if we come down, that I'm looking for entry to get back in to take out this high. Okay.
So BW, isn't that what I said? Even without you telling me, like that's what I want to do so bad. I just
you
need to
want to
be
get the
patient.
retest, right? You gotta get the
It's
retest.
the retest. So did I answer it correctly about market structure?
Well, that is market structure. And I think that what you have to do though is give yourself a trigger. So so my trigger is always a stop rate. This is my trigger. If you don't have this, I don't think you can enter to take out any liquidity.
Oh, wait,
Okay.
so you're talking about your stop rate is a double bottom?
Is a stop rate where this is lower than here.
Oh, got it.
So if it was like this, this is
And
not
you
a
see-
double bottom to me because we never swept liquidity.
You see
Okay.
it over and over again, and I don't be taking them trades. Liquidity grab, then it shoots back up.
Yeah, you need the liquidity grab first, Luther. You get this liquidity grab right here, then you can go for the high. So yes, we swept it right here and we came up when we never took it. And this is the patterns that I hate the most, right? Is where we fail to make new highs. Well, this is a more like a flag, but if it was like a pennant like this is the pattern I hate the most, where we just don't take highs or take lows, and we're just chopping. So this is where you wait, Malena, until we get a sweep of liquidity. Now you can look for the cup and handle. Now you can look for the cup and handle is the break and retest. Okay, this is or inverse head and shoulders, right?
Yeah, I was hearing you the other day, and I ran across a video that you sent me. And just looking at that, I've been noticing that I've been trying to keep my eyes on it. Like you see that pennant you got, and you see it go up, then it come down, then it go up, then it come down, then it go up, come down. But
Yeah.
you see when it first go up and make a high, and that low made that high. So you're looking for it to pull back and it make another high. So when it makes that, you can see it over and over again. If you go back to that video you sent me, you could play a high-low range in between that. And he was scalping it like that. And I'm like, oh, you see it over and over again. Like you see where it made the liquidity grab. And
right here.
Right. And then it goes up. No, the first go, come back right here. Now come down, come all the way down. That one right there. Now you see it do that. Now it makes now watch, follow that wick and follow it back up. Follow it back up. You see it make that high. Even though it's a lower high, then it come back and make a higher low. So you can play, he say you play off this range here because that's a high-low range, and you're looking to see if it can break. You know you can take a trade right there because it didn't take out that low and see a potential. That's a scalp. He say he's scalping this. And it goes up. I don't know how many points that is on the pip side, but you know, if you notice that over and over again, You
So
start.
Lulu, let me ask you, where do you enter right here? Where do you enter?
I
Right
would.
here.
I'm saying what I be seeing. I'm seeing that price is. I went into that. Me personally, I will go. I made a zone out of 30 minutes. If you go to the 30 minute on this same chart, go to the 30 minute. It's a zone right there, and I just refuse to play it. But if you go to the 30 minute, it's a. You see that doji? Go back to your left. You got the 30 minute on right now. Go back to your left on the 30 minute.
This is the 30 minutes right here.
Go back to the left. To the left. Keep going. Keep going. You see that doji right? It's a doji right here. With that white candle right there. You can make a zone out of that because that right there, that zone. I'm trying to make sure that's it because I'm on TQQ. All right, you know, I made a zone out of that. It's on the 30 minute. I don't know if that's QQQ, but it looked like QQQ.
This is NQ, yeah, but it's very similar. It's the same. It's the same.
It happened in a I don't know. Do you have pre-market?
Yeah, this is after hours and pre-market.
Okay, so it happened on the 14th at 9 p.m. 9 a.m. on the 14th.
Right here, yeah. You're talking about this though, this little breaker right here, right? Or this little order block.
So it happened. See, you don't show like so. Yeah, with the wicks at, so you can make a zone out of the low wick and the high wick.
Right here.
That wick and the high wick. Yeah, you make a zone out of that, and you see it over. You'll see price play off it all whole day. Now start going to your right. You got to cover that whole wick. Go back to that whole week up top. Yeah. Now go to your right. Now go to your right. To your right. Yeah, you'll see. Oh, you can do it on your lower time frame. On your lower time frame too.
This is the lower time frame right here.
Yeah. Go all the way to your. Not go all the way back to your right on your lower time frame and look how it plays.
Yeah, no, but what I'm trying to get, I'm trying to help Milena with is what she needs in order to get into a trade. So the reason why this is not an entry for a trade for me is because there's no breaker structure and there's no stop rate. This is the breaker structure that's all I'm trying to help her with. We have a high right here and now we break structure. You see none of these structures were broken and none of these structures were really broken. This is just basically a liquidity stop rate. This is kind of a breaker structure because we had a body close below. Right, just because oh, not really, kind of, but there's no displacement, Milena. You see that? There's no displacement. So since there's no displacement, we're not gonna get into a position here. If anything, we're gonna look for longs as soon as we get a structure with displacement. So this is displacement because if you look on the 5 minutes right here, right? If you look at the 5 minutes, we actually get a big breakout candles and it creates some level of fair value gaps. This is not the cleanest price action to enter. Maybe we could find it on the 3 minutes. Let's see. No, there's not really a clean, but you know, what you normally look for though is this is not the cleanest setup, but if you have a breaker structure, you take the bottom fib and you take this to the high and you want to get price on discount. We do not touch that discount, so there was really no entry for trade. So this is what I'm trying to help her with is what you need a trigger in order to have an A+ setup. Yes, it ends up coming up to the unmitigated fair value gap that I was talking about, where we have the unmitigated fair value gap that I pointed out in the beginning. We had it over here. This is the 1 minute, but when we go to the 5 minutes, we have the unmitigated fair value gap. You see there's a fair value gap right here. It does not get touched, right? And what did I say in the beginning? It's like liquidity. So when we finally get our stop rate, or we have a breaker structure, look where we go to. We go straight to the unmitigated fair value gap. So I'm just trying to give her a little bit of
where do you get in on the fair value gaps? You just as soon as it touch that fair value gap, you take the trade.
Well, no, this one is letting you know that hey, we got rejected. So if you want to get in on a fair value gap, Luther, is that once we get rejected, we come down, right? You could enter here. This is a little bit of a riskier play because you see this rejection right here. But this is one way you can get in on this fair value gap where you see we created a lower high. What I would yeah, so this is one way to do it. Let me see if you can get in on the 1 minute. You see on the 1 minute, Luther, there's another there's a fair value gap that's a little bit smaller. So this is where actually the trade that I lost, but then I made up for. So what I saw right here was that we had a head and shoulders, right? We rejected the fair value gap when we came down. What I wanted to see is a displacement and then come down. So I wanted to see this part get taken out right here. And I wanted to see us eventually coming down to, yeah, take out all these wicks, right? This one, and then one more right here. But to answer your question, Luther, how you get in on a fair value gap is that you want a stop rate, right? What I said earlier, a liquidity sweep for the price to go the other direction. An example of a stop rate is right here, right? We have a liquidity sweep and we go the other direction. Do we get one up here? We have one right here, right, Luther? So you would get in as soon as you get this rejection right here. Why? Because we already had a rejection here, right? We came down, we displaced through these smaller time frames, but look at when we made this violent push up, right? We had the this reversal right here, and once we get down here, I entered the trade right here. We just ripped right here, and we took out all the liquidity. So what you want to do is once we get a displacement, we get a push after we reject. Now you want to get in on a fair value gap on where we displace, because when we displace downwards, we create fair value gaps, right? We create fair value gaps. So right here, Luther, if you want to just scalp, right? We create fair value gaps when we're dumping. You see how we created this, came down? Yeah. You can scalp this, come here, stop right here, and then we're just chopping. We're holding another fair value gap here. So you don't want to trade any of this area until we get the manipulation. Get the manipulation. It takes people out of their contracts, and then it dumps and it takes all the liquidity. You see that?
Oh, you want to see, so buy's not failing to take out that high. That's a liquidity sweep.
You see the sweep right here? This is the manipulation right here. We're coming, we want to come down. We want to come down because there's all this liquidity right here. We want to come down, and then it just takes people out of their contracts. And look how violently this dumps.
Yeah. And you know what's crazy too? Like if you look at that trade, like if you did a trend line break, right? You think it's a trend line break, but it's really not. It just was a fake out.
Which one? This one right here?
That one right there, right? Like say assume
you
started going up, and then people think, oh yeah, it's gonna go up, I'm gonna get calls, but really that was a fair value gap, and then that just was a quick rejection. But people thinking, oh, I can get in for longs, and it really wasn't a long.
No, look at this. All right, let me replay this for you, okay, Luther? So right now in hindsight, it looks like, oh, it's obvious, it's head and shoulders, right? Which I believe it was. But when we were right here, we replay it, right? We have an untapped, unmitigated fair value gap, just like we had an unmitigated fair value gap up here. So what happens to unmitigated fair value gaps? They're liquidity. So this is the trade that I lost, and then I made my money back. But I was going for this rejection because we had a stop rate right here. We had a stop rate right here, right? And then I was assuming for us to come down and then sweep this. I put this on my channel, and I was like, we're going to come down here. Why is it not playing? What the heck? Hold on, my internet's unstable. Okay. You see, now this took me out of my contract right here. And once we got into this rejection area right here, you see the huge rejection. Now you see another stop rate up here. So now, and then once we establish this, Luther, does that mean, does this not establish that we're now created a lower high?
Wait, why do you say that's a lower high? Hold on.
Because look at this huge rejection. This
it
huge
like it really is a double top to me.
Right here, right?
Yes, a double top.
Yeah, and because of this huge rejection, that's where I would have my fair value gap, right? Or my this is a fair value gap. So if you guys are still learning the 50 fib, it's called a consequent encroachment. So if price comes and closes right here, I would be out. Closes above 50% of this huge wick. Okay, but because of this huge wick, what is a wick? A wick is a price rejection. So when price is rejected here, we now know that we're going to sell off. And I put it in my channel. It's like, we're going to sell off here. And we immediately sold off. So Luther, if you're playing futures, this move right here, this is the what? Let's say you enter a little bit later, right here, 18 to 870. Let's say 880. What is that, Melena? How much?
Use the measure thing.
Okay, you're right. Let's say you entered right here after and then you exited right here.
Yo, how many ticks was that?
This was 44 points. 170.
170 ticks times 5? Bullshit.
No, times
That's
2.
almost 200 ticks.
No, times 20, right?
No, the ticks. The thing is, I already measured the ticks for you. So if you did the 44, that's times 20. But if you do 176, that's that times 5. So imagine 200 times 5 is $1,000.
Yeah, you made $1,000 right here, Luther, just on this move right here. But we need the liquidity
Just that
sweep.
one move. How many
But to-
minutes?
but
3
to
minutes,
answer
4
your-
minutes?
1, 2, 3, 4, 5, 6 minutes. In 6 minutes, you made $1,000.
Wow.
But don't focus on the money, right? What is the thing that we pointed out, Melina? We have our when we displace down, we create fair value gaps. When we displace, we create fair value gaps, okay? And when we do create fair value gaps, then that's usually where people want to get price on discount, you know? This is usually where you want to get price on discount. So this was the original move right here. Let's see. You see? Look at
So
that.
then the one other thing I
that.
would do, yeah, it really did. It did that. It
It
really
hit
did
exactly
that.
the 6
I guess
months.
the
See,
one
this
thing
is
I would
called
have
discount,
done.
Luther. You don't buy anything right here because there's no discount. So as soon as we kind of push back up, it hit the 618. Anything above 50%, the 50 fib is discount. So you don't want to buy anything, any puts here because that's chasing. You want to get it anywhere in here. So you could even enter it as soon as we hit this thing because, and then you have your stop loss right here because this is anywhere here is discount. And because we established that we created a lower high, this is created a higher high, but we did not displace above it. And we come right back down, okay? So this is what
So BW, just looking to the left, right?
Yeah.
It would still think, someone would still think that it's still maybe an uptrend and it's just like a small pullback.
Yeah,
But I
because
think
we
the reason
create
why
higher
you're
lows.
saying, yeah, but what you're saying is because you saw that liquidity on the bottom, you're like, nah, it has to come down to take that out before it goes back up. And I think that's the
Yes.
tricky part of trying to
Yes.
figure out up or down, long or short.
Well, always look at the you know, like the bigger time frames, right? Are we like we're like right here, this letting us know that we're gonna pull back. Just like I said, right? What are wicks? Wicks are price rejection. So we want to put our 50 fib on when you see huge wicks right here. This will let you know that, hey, until we get a close above 50% of this wick, right? That's gonna act as a huge rejection. Okay. So when we see that, what do? We displace. Do we not displace right here? We displace down and then we create fair value gap, right? But this is still no entry for anything yet, okay? Until we get, unless you want to be a little bit more risky right here, let's see if we can find an entry. Let's see if we can find an entry right here. Okay, so right here,
Yeah,
we
it
have
almost
the fair
seems like
value
it's
gap,
bear
like or the
flagging.
zone. This is the zone that Luther drew out, right? So let's just play Luther's zone with what we have, okay? Let's delete this thing too. All right, so what we see here is that we created now a low, and then we created a lower low, right? So as long as what is going to protect us from calls is this fair value gap right here. So anything below here now, I'm gonna be looking for us to take out some of this liquidity, unless we close above here. Okay, so once we come down, there's no trades here at all. Don't fall for any of these wicks because, oh, we double bottom right here. All right, this is not good enough of a setup. You want to wait for structure to develop, you know, and this is kind of like the structure you want. Now we got a trend line break, and if you have a trend line break with whatchamacallit, a liquidity or a stop rate, right, then you can kind of have a little bit more confidence in just scalping this. You see that? This is a good move, right? Just this tiny move right here is better than
So,
just
so you take that one.
this one right here. Let's
So
say
you'll
you
take
just
that one. Okay.
yeah, this is like what 149.6.
Damn.
This is these two bars just because you waited for this. I think you need to wait for this, Melina. If you could just wait for
Yeah,
this,
exactly. I need
promise
to be
you
patient.
that you'll be a little bit
That's
more
what I
patient. If
need.
there was no stop rate, but not just patient as in just like, oh, I'm just gonna sit around and then if I lose a trade now, I'm gonna start going on tills. You need this structure. You need a stop rate,
Yes.
and then you can go a different direction. But if you notice this chop, there's gonna be stop rates everywhere. Okay, so notice that now this is what gave us the confidence first. We have this huge wick. So this is huge wick is letting us know, hey, we need to pull back as long as we stay above the 50 encroachment and as long as we stay above this 50 or this fair value gap. Okay, we might come and touch here, but if you're on the 1 minute, it might look like we're breaking here, but on the 5 minutes, it's just a wick. It makes sense? So this is what I think.
No, that makes sense.
Yeah, so that's what I'm saying. Always have at least a switch back and forth. Look at the 5 minutes, but let's see. Let's try to find another opportunity to get in a trade. Okay. All right. So you see how that zone Luther played out was nice. You know, if we came and we touched it, but there's still not enough structure now. If you miss this whole trade to get in, even though there was another opportunity to get in right here, there's another opportunity because you see another fair value gap right here. You see this fair value gap right here, Melina?
I see
Do
that.
we
And I
have,
see a morning star. So then to me, I'd be like, "Ooh," you know what I mean? Like I want to jump in
no,
on that.
but do we have a stop rate for this trend line break?
Stop rate? No.
This is a stop rate. We have a wick above a former wick. Do we have that?
No, that was a stop right there, but down below, I don't see another stop rate.
You don't see a stop
Hold
rate,
on, I'm
right?
driving. Hold on, let me zoom
Oh,
in.
okay.
Hold on. No, sorry. Oh, that second. Oh, that second stop. Oh, that's okay. I see that the second one. Okay.
So
All
you
right.
don't
So
just
you have
enter
two
right
of them.
away.
Got
You
it.
notice that we did a stop rate, and now you notice that we have a trend line break. So let's say you
Yes.
entered late, right? And you know that we're in a downtrend on a smaller downtrend. You wait for the close right here. Your stop would just be above. It should be above here, but I mean, since you're
How
playing
many ticks
NQ,
is that though?
I
That's
know since
expensive.
you're playing NQ, it's a little, you might just like let it go in your favor and then immediately move to break even. So I'd probably do it like this, right? And if it just comes up and breaks 50% of here, I get out, right? But I would
Yeah.
kind of get it with no stop loss right now, right? I would probably put my stop loss up here and then see how it reacts, and I'll just close it if I see it pushing back up. But then once I notice that we're pushing down, immediately now you can move your stop loss to break even, because you have a target, which is this zone right here. And look at, we touch this zone, we get out. Okay. So that's how you keep your stop losses small, because you have the confidence that we're in a downtrend. So you shouldn't be too scared to let it play out a little bit more, because we clearly have a zone to come to, right? So let's see if we can find another opportunity to get into something. There's no trade here. We have a high, a low, and we have not created a break of structure yet. Okay. There's no break of structure. Let's just delete this to get this out of the way. Get this all out of the way. We had a fair value gap right here. Let's just work with what we have. Rejection. There's still, the reason why I wouldn't get in anything right now is because right here we see an inverted head and shoulders, right? So, but we don't have a break of structure to the upside for me to feel confident in, especially with this time frame. Maybe on the 1 minute we do, but we have bullish fair value gaps, right? We have a bullish fair value gap here. We have a bullish fair value gap here. So I want to break a structure and I need a stop hunt in order to enter a trade. Okay. We bounce off this fair value gap right here. This is nice, right? If you just want to scalp the morning stars, Elena, and you see this inverted head and shoulders, then you could just scalp this for a gang of points, right? If this is your strategy. But we do have a stop rate for here.
Yeah.
Right here. So every time you see morning star, evening star, that's a stop rate.
Once I see an evening star, that's a stop rate.
Yeah, because a 2-2 reversal means that we broke below the previous candle. So that's a stop rate. It just
Now okay, got it.
Does that make sense? So every time you see these 2-2 reversals, that's a stop rate.
That's a stop rate. Oh, because you know what? That's almost like my stop loss anyways on a morning star, the break below the previous that previous doji.
Well, not necessarily a stop loss. But that would be the strat, which is good. But a stop rate is just we swept. That just means we swept liquidity.
I swept it. Got it. Okay, swept it. Okay, no, perfect.
It doesn't have to be like that's right here. We don't have it right here, right? From here to here, we don't have it, but we do have it from here to here. So the stop rate doesn't have to be the next candle. It could be from previous wicks before, right? So it's either like this or it's like this, right? So that's just one way to look at it. But let's just let this play out just so we can kind of get a little bit. This is how I back test. Okay. So there's still like there's no break of structure really for me to enter anything. Okay.
But wouldn't you do a fib though? I wonder what that morning star at the right shoulder, was that a 50 fib right there if you fibbed from the swing high to swing low?
Where?
From there down.
Here to here?
To the first morning star, the previous one. Like, you know what, the first morning star I would have gotten in, and if you did that, was that a 0.5?
Yeah, we break the 0.5, right?
Yeah.
But there's no trigger for me, right? There's no trigger.
Yeah.
Because this is the break of structure, or this is the displacement that we're looking for, but we do have support here. So I wouldn't really get a trade right here, right? Unless we displace below here, right? If we just rip below here, like we come down like right here, and now I'll look for us to come to this fair value gap right here, and then come down. Okay, that's the market structure. Okay, this is what the fair value gap, this displacement for here. But we have to displace through here in order for me to come up to this fair value gap and get lower. Okay, right here. Okay. So when you ask like, oh, I don't know which fair value gaps to use, right? Yo, I know you said that before, right? It's you want to take it on after you see rejections and because when we get displacement like here, then we have fair value gaps, right? Like right here, I mentioned earlier, we displace down here and we have this fair value gap right here. So this is going to protect us to continue to go lower, okay?
What time
Protect
frame is that fair value gap on? Is that a 5-minute fair value?
This
Or
is the
1 minute, 4
5 minutes right
minutes?
here.
A
Yeah,
big
I'm just
one.
practicing with
Oh,
what we
it's
have,
huge.
okay?
Yes.
So,
Okay.
so right here, you should not trade because there's really, unless we come and we create a high right here and then we rip above this high, there's nothing here for me to trade at least because I need a displacement. I need like a break of structure with a displacement and a fair value gap that can change. Okay, so let's see if we can find one more trade because I know you're on the road. Oh, this is after hours, huh? This is after.
Oh, could be.
Yeah, this is after hours. So the volume is very slow. Oh, another thing I think that I should remind you too is that when we have these, remember you showed me the kill zone?
Yeah, the kill zones. Yep.
Yeah. So what I like to do too is like we create ranges with them. So like right here we have the Asia low. Let's just try to mark it out and see what happens. So you have the Asia low right here. I'll just mark it out right here. That will be our liquidity. Okay. So this is like, since we're still in this area, we have this Asia low. So I'll just leave this here. So when I hide everything, so it's not messy, at least I know that this is the Asia low now. Okay. To things a little slow. Froze. Thing froze. Hold on. A little spotty internet. But is it making a little bit more sense to you, Melena?
Yeah. No. Definitely.
What is going on?
You know what I mean? And it's called it. No. I have to look at this market structure. I have to pay attention about the displacement. I think that's what I need more practice on. So I have to back test and do that more.
Yes. So let's get to let's go to the market New York session, market open. So I'm just gonna fast forward to market open. 5. We bounced off the look at that Asia lows right here. You see that?
It's crazy.
But let's see if we get the display. This is considered displacement right here, but because this is like overnight, let's see if how we react here. Okay, this is the displacement, the breaker structure, right? We have a high, we created a high, and then we swept liquidity and we swept liquidity. Now we created a higher high. So in theory, right, what I would like to see us is let this high finish. Okay. All right, that was the high that's finished. So in theory, what we do,
I would have fibbed that. Yeah. Oh, look at you.
Okay, we fib it. And then this would be the 618 right here. And look where the 618 is. So that's why Raj is always tripping out. Is it in a fair value gap?
It's crazy.
It's in a fair value gap, right?
Yep.
So that's just like what you look for. And sometimes it might not come to your spot. It might not come right back. It might just keep going up. Or it might go to your spot. But
and then look at that. It failed. Oh shit, look at that. But I wouldn't have gotten in at the 0.5 unless I saw an actionable signal. Like that's another thing I'm trying to do too, is just because it's a 0.5 doesn't mean just jump in. It has to be like a reversal or something.
I gave you the signal though.
Wait, I thought that was in it. Hold on, I'm like doing GPS too. No.
Okay, the signal is, remember, did we not get a liquidity sweep?
Oh, I thought it was beforehand.
No, we swept liquidity. This is the bigger market structure. This is external and internal. Okay, these are all internal liquidity right here. And this is external because this is the bottom of this area, right? So this is the external.
Okay, yep.
We have external liquidity. I'll just make it bigger so you can see it.
Yep, no, that's fine. Okay.
Swept it, right?
So we swept it, you went up, and then you did a fib off of that impulse going up. But then when you did the
before that, we need this. We need to create a high. And then we need a liquidity sweep, and now we need to break a structure. This is what we need first.
So I need to break that. Okay.
You need to break a new high. So we created a low and then a high right here. So once we created this low, now we broke this high. This is the break of structure. Yep. So that's where people create order blocks.
Yep.
Because in order to have a break of structure, or in order to have an order block, you need a break of structure with the imbalance. So if you're just trading order blocks, right? Just because you asked that before, an order block would be right here. This is where you
Yes,
enter.
the dojis. Yes, those dojis with the
This is where you
impulse.
enter your trade. Okay. But if
Yep.
you're trading off the fair value gaps, right? You want to get price off of of 618 or anything under 0.5 in a bullish fair value gap. And this is now a bullish fair value gap. And I'm gonna make it different colors. You can see it. This is a bullish fair value gap. So anywhere in here, you can
Got
get
it.
in. Okay. But this is just in theory. Let's just see where this comes out, because we do have we did have this PMG that swept all this liquidity right here. Okay.
Crazy.
So let's just see, because if you just entered like off this order block right here, or let's say we entered right here, our first target would have to be right here. Okay. So let's see if we can get there, and then we got it. Boom. Okay. And that's all you need, right?
Yep.
That's all you need from right here. Let's just say like you wanted to wait for this to finish. But Milena, when this is happening, right? When this is happening right here, you should already be like, I'm looking for longs. We broke structure with a huge displacement, creating a fair value gap. We have an order block, but we don't have to just ignore the order block because I don't want you to try to do multiple.
So where should I look? Where should I look longs? Do it again. I assume that I can. Where should I look for longs?
Okay, so once you get this break of structure, I'm just gonna mark this out. BOS. All right, we have a BOS. Okay.
Yeah.
This is the first thing. This is the first thing you need. The first thing you need is liquidity sweep on the external. So we have an external liquidity sweep. You got that, right? So let me just mark this down. Sell side liquidity, okay? And then we get a break of structure. Now you're looking for longs because do we have a bunch of liquidity up here that have not been touched yet, right?
Yes.
So you want just I'm just gonna draw this out for a visual since this is recording, but then just keep it in your head, right? Liquidity, liquidity. Liquidity. This if it's all low hanging liquidity, they're gonna get taken out. Okay. And then there's a fair value gap up here, but I don't know. Can we touch there? But this is good enough. But let's just see if we can touch there. Okay. So, but right here though, right at this point, right? We already took out all this liquidity. So that's the thing that you also have to be mindful of. So I'll delete this because on this break of structure up, we did take liquidity. Okay. So maybe I'll just show you the structure first. So at this point, yeah, now you want to do the 50 fib, okay? And while this is happening, this is a stop rate, no? This is 2-2 reversal, or this is a 3 actually. This is 3 down.
I think it's crazy, yeah.
This is a huge wick though, because they know that we had to touch this order block, and then we immediately came back up. Okay, so there's also a fair value gap right here too.
Yep.
Did you see this fair value gap right here too? I marked down.
Fair value. Oh, yep.
We touched that, and we touched this, but we're not closing below this. So at this point, this is not your confirmation yet. Okay, this is not your confirmation. Now you see this reject. Now you should get excited because guess what? We have a bearish fair value. We have a bearish fair value gap here. I'm gonna make it blue. Okay, so if we can get above this bearish fair value gap and back above 50%, then that you should be like right there. Boom, right here. Okay. So let's go down.
And it's bearish. Why?
This is bearish because when we displace down, we created a fair value gap. This is when we displace up, we created a fair value gap. Make sense?
I'll redo.
Okay, so in order for it to be a bullish fair value gap, we have to displace upwards, and then now.
Oh, it has to bounce up and bullish. If it's
now when we come down, we have a fair value gap because we're coming down, right? So if this was a red candle,
yes, we're coming down.
See how we're pushing down, fair value gap.
Yes.
Okay.
Got it.
So usually like right here is where I would look to enter or you could enter right here. This is the right way to enter is once you see like these rejections, we had a stop rate right here, and then multiple rejections above the 618 is holding heavy in this bullish fair value gap. All right, and we swept out exterior liquidity. So now our target is to take out here. So what I would do is I would probably be on the 1 minute right here, Milena, right here, right? So I'll leave this 5-minute bearish fair value gap, and as soon as we get a push and close above it, this is where I would enter. This is what I've been doing recently. I would enter, all right? Stop loss would just be like, just right here, I guess, and then I'll move it immediately when it goes in my favor, but If I just see a huge rejection, I'll just get out and look for another opportunity to get in and stop. And then my target would be right here. That's how I'm able to hold my trades a little bit longer, if you notice, right? So like now I'm not worried because we're back in this area. I'm not worried. And guess what? We have this 1 minute fair value gap right here. And guess what we're doing? We're holding it, right? So I'm not getting scared because I know that the draw on liquidity is right here. Okay. So I'm still not getting shaken out, and then boom, I'm out. Okay. And what is the measurement for this one? Just right here. I'm not gonna say, oh, I timed the bottom, because you need this this break and close above here in order for me to feel like, okay, now this is a safe trade. So let's just go from here to here with the ruler. That is 104 ticks. Right, that's 104 ticks. That's 26 points. So you don't have to catch like the very bottom, like some people right here who are a little more experienced with the order blocks. You can even catch a move from here to here, and this would have been my play. So that's why when I hear people saying, I just need to practice patience. I just need to take a deep breath. I just need to take my small profits and be happy with it. I just, there's no, you can't lose if when you're taking profits, right? So those things I feel may have good intentions, but in reality, they're missing the point, right? You need these triggers, you need a game plan in order to have a trade, or have more confidence in your trade. And then you might realize, hey, I shouldn't be taking profits so soon. Okay. So this was the break of structure. And guess what? Where do we go to? Where do we go to? Let's see. We come right back down. So that's why you're supposed to take your profits already, because we also had a fair value gap right here. Okay, a bearish fair value gap on the bigger area after we swept all this liquidity. Okay, but that's why I said the target was just right here. I was already out right here, but we're gonna let it play out, and now we gotta wait again for more structure. Okay, now this was a great play. Let's erase this. Now we're building our structure all over again. Okay, what do we see right here? We got another liquidity sweep, sell side liquidity. We keep getting these rejections in this area, but we're not going to get anything yet. Okay, still no structure. Now we're building structure right here, right? We have a pennant. We have lower highs and higher lows. This is Luther's favorite. Boom. Boom. All right, that's just the market structure. But we have liquidity now on both sides. Still no trades. Still no trades, because we need what? A displacement. We need a stop rate and displacement, okay? But we're just going up. We're just going up. What do we see here? Okay, we're just going up. This is where we want to go, but I don't know if we're going to go there. We still have liquidity here as well. But now we just swept here. Still no displacement. No break of structure. Oh, this is overnight. Okay, then day's over. We'll let it play out. We'll get all the way to morning. 15 minutes. Okay. Let's delete all this stuff. Where are we at? 6 o'clock. 6. All right, now the market opened again. Let's try to find our game plan. We held this area down here. Let's see what happens. Bearish fair value gap, first thing we notice. Another fair value gap up here. No displacement, right? We have a stop rate right here. Boom. Well, the goal for stop rates, right, is to get to right here, but we'll see. Right, we'll see. There's a bearish fair value gap right here. No displacement. So this is where people get stuck, right? And we already went through this again, right? So this is kind of like I don't want to be cheating, but if you're back testing, it's okay to go over it again, try to figure out what's going on. Welcome back, Milena. All right, so Milena, are you here? Are you have your can you unmute or you're busy? If you are, it's fine. I just want to review the same day that we did on Friday, but if you can now, with all the things that we covered, can you find a way to get into a trade following that type of rule, right? So there's right here, again, we have no displacement, but we do have a stop rate. We do have a bunch of liquidity right here, and we do have a bearish fair value gap right here that's holding us below. Okay, so we got stop rate. The draw is to the upside, right? Because we have, what did I say? Fair value gaps act as liquidity as well. We have liquidity up here that have not been tapped into, but we already swept liquidity down here. So we're not really looking for puts unless we push hard below here. All right, or if we come all the way up here and then we create liquidity. But right now, all the sell side liquidity has been kind of taken out already. Okay. So now we're getting that displacement to the upside, but there are no fair value gaps right here to get us into any trades. But what I did mention on my channel is that I didn't mention it, but we did have liquidity right here, right? And we did have a bearish fair value gap that we're closing above right here. So that is if you want to play breakouts, but I don't think that if you're learning and stuff and you're trying to like, have a better understanding on how to hold positions and not get faked out, I don't recommend breakouts unless you're given like a clear, I guess, a clear trade to make. Sometimes what I do for breakout trades though is that I'll put let's just pretend this is an order. So let's go to rewind it to the breakout. So usually what I do is that I can't enter a breakout off here, right? Obviously we have a liquidity sweep, so the draw is to the upside, but I would need a close above this fair value gap. So what I would do is I would put, if we get to right here, I would put an order above. Once I see that we're closing above here, I'll put an order right here, and then I'll put a sell right here. So just so I can capture some points, and then I'll put and then I'll have my stop, obviously. I'll have my stop set right here, right? But once we start going in my favor, boom, immediately I'll just have the order set and then the order sell. So it'll do all the work for me. It'll get me in my trade and it'll get me out of my trade. But I digress. We shouldn't be doing that as we're trying to find out what our strategy is. So now we hit now we disrespect this bearish fair value gap. So we know that, hey, we could chop around, but the goal is to come right back up and see what we do with this fair value gap. Okay. Still no what you call it. So this is the break, okay? Oh, so this is another way I think, Milena, that you can use. So we have this rejection right here. You could play rejections of fair value gaps, but again, that's not a trigger. We create a bearish fair value gap. So, but we know that we're in an uptrend, right? So we had the break, and this is actually the retest, right? This is the break and retest. Like I mentioned earlier, we didn't come back to discount because we also have this trend line protecting us as well. Okay. But one of the things that I do that could be an entry for trades as well is that we have a bearish fair value gap, and my entry would be when we actually disrespect this bearish fair value gap. Okay. When we disrespect this fair value gap, you see how now we're disrespecting it. So these wicks right here, once I see that we're going to close above, this can be, or once we close above here and then we came down and we touch this fair value gap again, this can be where your order filled. Order filled right here, green, boom, order filled. Okay. When we disrespecting this bearish fair value gap, come and we touch it because we also have draw liquidity. We disrespect this fair value gap as well. Let's see what happens. Okay, but this is already a big enough move. We took out this target already, and then we took out this target already. Okay, these relative equal highs right here we took out. So in reality, let's see what happens. We can probably come right back down. We have this bullish fair value gap that we're probably gonna come right back. Disrespect. Ooh. We have these relative equal highs right here too. So right here. All right, we took the target. Boom. Okay. That's crazy. That's crazy. But yeah, we took this, but our draw is to the upside because of all this liquidity that we already took out. We took it out. And if you look in a bigger time frame, this probably looks like a, what is the structure? This is a, turn off this magnet. Let's turn on, where's the drawing tool? It's that drawing tool. Oh, I have a, that's strange. Anyways, basically have a low here, and then we have a lower low, and then we have a higher low. Okay, so in a bigger scheme of things, this is a very, very ugly inverted head and shoulders. Okay, anyways. Now this is the head and shoulders. Okay, so now that we
I was on a trend line there, assuming that break is about to happen to the bottom. I guess I'm trading differently than how you want.
What trend line?
Like do the trend line from the bottom there. Every time we kept making a low, a higher low. See, so that's what I'm looking at market structure, right? You see that trend line where that hammer is from there all the way up. Exactly. That's how I trade. And then you see it's a rejection off of that fair value again. So now I'm expecting.
And then you're on the
I'm
one.
expecting is on the 1 minute. And what I'm
So
expecting
yeah, you tell me.
To break. Go ahead. Yep.
So you tell me then, with your strategy, right?
When I would get in.
Yeah, when you get in.
Okay, so let me see. So if you do that, yep. So I'm waiting. Yep, waiting.
You get in there, huh?
No, I wouldn't get in there, no, because I'm waiting for it to break the trend line, or I'm waiting for another retest of that fair value gap.
But let's say like you're not trading the right way, right? Like you're
Okay,
rushing.
yeah, I'm not trading the right way.
Would you ever get in early on trend line break?
No, nope, I won't.
Okay,
It's
just curious.
Yeah, no, I won't.
Right there.
Okay, so see, so that's a break. I wouldn't get in yet. I'd wait for a retest. I want a clean close below that trend line. So
This
go
is
to
a
the
clean
next
close,
candle.
right?
No, well, it broke, but then okay, see, I would probably get in right there. So I'm gonna wait for it to touch that for a put. I'm gonna wait for it to I'm gonna wait for it to touch that trend line again, and I'm gonna go to the next one, go to the next candle. So as soon as it touches it, I'm in. Ready? Let's see. I wanted to touch it. Oh, I didn't touch it. Shit, I would have missed it.
Oh.
But it was a clean reject. You know what I mean? But I guess how many ticks would I have missed? But it's okay.
Right there, Melena, if you waited, right?
Jesus. Oh my God, it never touched it a second time.
It never touched the trend line, right?
This is a little
bit of like a little bit of accumulation.
But that kind of sucks over that time. I don't even know what time is it, like 2 o'clock, 3 o'clock? The accumulation
it's 3 o'clock for you, yeah.
Oh, so that sucks. So that's the yeah. But I'm wondering though, even if I got another doji to the downside, right? Because the third candle never broke the previous doji. So then that probably could say, hey, you know what? You're probably good. My stop loss would have been the high of that the first doji, not that one, but like like after we broke the trend line.
Oh, right here.
So I could have my stop loss could have been the high of that doji right there, if I wanted to get in quick.
But that's the bearish fair value gap. That's what you want to get in. You get me?
Oh my God, even better.
That's where you want to get in.
Even better.
But then the reason why this is like a lot of foolery right here, we have this bearish fair value gap, right? Just like I mentioned, a fair value gap bearish is because we displaced down as breaking this trend line. And then your re-entry should not really always be up here. It could just be off this fair value gap right here. You can just enter and you're like right here. And your stop is just above this fair value gap. And then your target should be first right here. So how big is this move right here?
How many ticks? Yeah.
This is 13 points.
Not a lot. So 13 times 20.
I'll just do the measurement right here.
Do that one, yeah. Okay. 52 ticks. All right. So $250. Okay.
You see? Yeah, so I think you have to identify I think you have to remember the things, the checklist, right? We need a stop rate, right? Liquid, and then we need a
stop rate,
displacement, and then we need a fair value gap displacement with a fair value gap, and a clear target draw and liquidity, the clear draws, right?
Yeah.
Right here is
Yeah.
this is, but we also have in order for us to really dump after here, especially after we're holding, and we had another stop rate right here. You see how we had a stop rate? Let me turn on my magnet.
Oh, I see that. Yep, that was a stop rate. Yep. Wow.
That was just holding us because we failed to displace lower. So that means
Yes.
eventually
So-
we're gonna come down lower, but we need a trigger to come down lower. And this is
Yes.
where
So what's the trigger? Let's see.
trigger would be another stop rate.
Yeah, let me see. So that means the upside. Oh, okay, let's see. Oh, I bet you. What if you extend your trend line more? Do you think it's eventually gonna touch it? Okay, let's see. Is it coming down? Oh. Oh,
No.
see. So look. If I look at that, that looks like it's we're ready to
But
go
if
down.
you
As
if you have
took-
these
took out
trend
a
lines,
stop rate.
we had
Look
the
at that
stop rate.
stop rate. It just took out. You see? I see. You just took it out.
This one, right?
Yep. See. Okay. It's collecting this good.
And did we run into a fair value gap, right?
Oh, so look at that. Another fair value gap. Oh
That
my God.
is
Took it
double
down.
confluence.
Yes.
That's a double
Yes.
confluence.
All you need
Do we
is
have
two. All you need
targets?
is two.
Do we have clear targets?
There's a lot of targets. There's a lot of
Yeah.
targets to the downside.
We have a lot of targets right here.
Yep. Mhm.
So this is usually
you-
where you would want to enter. But you could also be safe. There's a bullish fair value gap right here, right? So
So I gotta
you want to be
wait.
if you want to be safe, you could just be like, okay,
Oh, look
we're
at
closing. No,
that.
we're closing right here though, right? So we're disrespecting this fair value gap. So
So get in on that impulse candle, or just
yeah,
get
you
in
can
on
get
the.
in right. Like as soon as you see that we're gonna close below it, especially you know why? You know how you could tell? Because what are wicks?
How?
Wicks are price rejections, right?
Price rejections, yes. So we rejected that, yes.
We just kept pushing down wick,
And I'm not even losing that much with that.
Yeah.
With that stop loss, right?
Yeah. Or you could have
Oh,
just like
wow.
literally, if you saw this huge wick at this fair value gap,
Oh, yeah.
you could have like got in right there.
I was gonna get in and then just basically risk the top of that wick. Like if it doesn't break the top of that wick, then not even that wick, the previous wick, that big one. It's just like let's keep going.
Yeah.
Because that was a huge reject.
But this
yeah,
is a
that's
green
good, yeah.
candle though, so it's a little bit tricky. So as soon as you see this red candle, you can enter and then just do a stop up right here. And then your target.
Yeah, that's what I was thinking. Yes.
Right here, right?
Yep. Okay. Let's see. Okay. Plan it out. Let's see how. Oh my God. Okay. Oh my God. How many ticks was that?
And then we have this liquidity right here though, Melena.
Jesus.
Oh
this is
my
amazing.
God.
Oh my God.
Now we have what this took out.
And now we broke structure. Isn't this the break of market structure? Because now
yeah, we did break structure.
Yes.
Look at that. We hit that target right there.
Mother sucker. What?
Now we hit
And then
the
look at that. All that was a break and retest back even more downside. And that's an 8.
And was this not a bearish fair value gap?
There.
Bearish fair value gap, bearish fair value gap, okay?
Yeah.
But if you're like this was early in the day, all right? If this was early in the day and you missed this move, this is the displacement that we want. Then we draw our fib, right? And you would only enter off this fair value gap for puts.
Wait, but that's but this is after the fact.
No, I'm saying if this was early in the day, this is the end of the day.
Okay, yeah, but I'm just trying to think. But you drew this fib. Okay, so then that means if I'm getting a fib after this, it has to reject off that 0.5 the next couple candles, right? And
Because if I was late to the party, I'm not chasing. You should not chase this.
No,
it should be your rule.
I'm not.
It should be your rule. You draw your fib on here to here only if we get fair value gaps and we displace. Okay, that should be your rule. We displace right here. We have a break of structure right here with a displacement creating a bearish fair value gap right here. Okay, so in order to enter puts to continue us down to take out the rest of the liquidity, right? And to have like the best risk to reward ratio. When people say I need to do a better risk to reward ratio and they're not doing this, and how are you doing a best risk reward? I'm going to put my stop loss here. How is that really going to be beneficial, you know, to your trade? If you just put your stop loss here and you got stopped out, you put your stop loss here, you got stopped out. You got to understand like, oh, you need to break a structure. All right, displacement down. We do have targets to the downside. So if I were to enter puts, I would enter puts here on like, let's say like, depending on where we are, I want to see a morning star or evening star right here. And once I see the evening star, I'll put it here and I'll put this in the top and then I'll put my target all the way down. That's how you do your, but right here, you cannot chase. Okay. So that would
Okay,
be.
so I have to write those rules down because you said a lot and I don't have a. Oh, I do have, let me grab.
Yeah, I think if you follow those rules, I think you but like let's just say like you strictly just follow those rules only, you could be a successful trader. But you can't do anything else other than to follow those things. I think you'll be successful. But the hard part
Okay.
is we're human, right?
No, we are. But hold on one second. I'm gonna grab it. Hold on one second. Hey, can I have a plain sheet of paper? Some or maybe something that's not being used, or is there a notebook? Oh, could you mind ripping just one thing for me? Okay. Oh my God, I appreciate it. Thank you so much. Okay, thank you. Hold on, they get these notes down. My son's doing his evaluation for the viola.
Okay.
Okay, all right, let's see. So, okay, I need to, so
All
one,
right,
I need to see what is market structure.
so yeah, so
Okay.
where are we going? So from based off of for this day, based off of where we're going, you don't want to just do like unless you're a swing trader and you're like, oh, like we're gonna go up.
Oh
And
no,
Ruby's always
I'm not a
right when he
swing
talks
trader.
about
Nope.
that, right? It
Nope.
is always going up. The market has we're probably gonna go all-time highs this year, but that does not mean you cannot trade puts. Okay, so you got to find out what the trade is for the day. And the trade is for the day after you see this huge rejection that we all have liquidity to the downside. So in order to enter, or what you want to look for first is once a displacement happens, right? We have a displacement. Let's go back to the beginning. We have a displacement to the creating a fair value gap. Then what we want to do is play the retest, which is the 50 fib, right? You want to get priced on a discount. But in order to enter the trade, you need a stop rate first to happen.
Okay, hold on. There's two things. Okay, so one is entering the trade, and then one is just overall market structure, right? So what I'm doing.
Okay, so let's just go. Yeah, let's just go to all right, right here, for example. Okay, so we're gonna go just 50 fib. This is the consequent encroachment. So we have displacement to the downside, and we will not chase trades. We will wait for a stop rate to happen.
Yes.
We wait for a stop rate to happen after we hit discount. Okay, so we hit discount right here, the 0.5, and we had a stop rate. So that means that if you see a trend line, Milena, then you can trade it. You cannot trade a trend line break until you get a stop rate.
Okay, hold on. Okay, so I have to write that down. Hold on. For trend lines, okay. Trend lines requires
a stop rate.
Stop rate.
And we need
a discount. I need a discount and discount.
Yeah.
Which is fib discount, 0.5 or 6.1. Yeah.
Yeah.
Okay, got it. Trend lines.
Okay. So, and the other one, right? This is the
Oh, hold on one second.
Because you see it all the time. You see inverted head and shoulders and head and shoulders all the time. Let me know when you're ready. Very, very, very long class. Recordings.